What's up, YouTube fam? Welcome back to the channel. We got a special episode for you guys today because there's a lot going on in the market. There's some new positions I took and I want to cover them and just discuss with you guys what I'm working with. So, in the end of the day, the market is dancing its own rhythm, right? And you're just trying to dance to the beat that the market is dancing to, right? And that's what it comes down to. Now, I understand that trying to trade, trying to be involved in the market, it's very difficult, right? Obviously, yesterday's video wasn't easy for me to make. And it's just funny, right? Because a day later, even though the account is still technically down, since we're up on the day, it feels amazing and it just feels refreshing, right? It's just funny how, you could be getting beaten up, but the moment you start to see some life, you can easily, turn it all around. So with that being said, I want to talk to you guys about a bullish strategy, a strategy that I like to use if you're going to buy options, right? At the end of the day, buying options naked, selling covered calls, selling cash secured puts, doing it all naked is always not, it's not that it's a problem. There's nothing wrong with it, but it's always going to be more risky, right? So being that we have a bunch of covered calls sold between TQQ and IBIT, I decided that I was going to take a little bit more of a bullish approach because looking at the chart, this is the 1 minute, obviously that's not useful. Looking at the chart, I felt like we were due for a bounce. At the end of the day, sometimes the best way to get an outlook on where the market is heading is just to flip it, right? Now, if I was looking at this and let's just say it was the opposite. Let's just say these were green candles. When you see something going up this sharp, it's almost always going to retrace back down, right? Because in the end of the day, even if it does go up this sharp, it's going to come down and retest this zone right here. It's just how the market works, right? So, I think when we don't see it, right? When we look at it from the bearish perspective, it's very easy to panic and to say we're going to go down forever. And when we look at it from the bullish perspective, it's very easy to become ignorant and think it's going to go up forever. Here's a good example, right? It came down so sharp and look how it retraced, right? Then it came back down and then ultimately. Now, here's the thing, the market, when you're invested in the right asset, it does eventually go back up. That's why investing in the right asset is the single most important aspect of options, option selling, option buying. So in this case of looking at this TQQ chart, listen, this is not by me any means saying the bottom is in. Obviously, there's definitely signs pointing to it, but there's also signs pointing towards a recession. Now, keep in mind, when everyone is calling for a recession, when everyone is calling for an absolute stock market crash, that's when the bottom typically does come. Now, today there was more news of more tariffs. There's news of Trump declaring an electrical emergency. It gets to a certain point where the bearish news just stops hitting, right? It gets to a certain point where the market stops reacting to the word tariffs, to this crazy stuff that Trump might be tweeting. It just becomes oversold. Now, when it comes to individual stocks, the unfortunate reality is first of all, trying to pick the bottom, whether it's individual stocks, the S&P, the NASDAQ, it's very difficult, right? But at least when you look at the S&P chart, right, or let's just look at the NASDAQ actual chart. Let's look at the daily. There's never really consolidation. Yes, there's these short terms of consolidation, but there's never actual consolidation. Now, when you look at actual individual stocks, and one of my favorite examples I always love to refer to is BABA, look how long it consolidated from January 2024 up until August. Now, or even all of this right here. It's just straight consolidation. Ultimately, you don't really get price action like this with the S&P or the NASDAQ. Not to mention that all of this here, the S&P and the NASDAQ was going up, right? That exact time frame, it was flying up. So that alone is why I don't like to put majority of my money in individual stocks. And I like to just stick to the NASDAQ or IBIT, right? Because again, IBIT, it's not necessarily an index, it's just Bitcoin. But in a lot of ways, Bitcoin is the S&P of crypto, right? It's the whole crypto market revolves around Bitcoin, and IBIT is just BlackRock's Bitcoin. So with all that being said, the strategy that I implemented today is, since I have a lot of covered calls open on IBIT and TQQ, I decided to open some buys. Now, again, I'm not an option buyer per se. I'm not a trader, right? If this play does play out, I mean, yeah, I'll show off my gains. But at the end of the day, it's not like, oh, I had some crazy chart analysis and I have some crazy secret. It's really the simple fact that I have a bunch of covered calls open and I wanted to hedge, because the good thing about selling options is you really can create these win-win scenarios, right now these covered calls are up $200, and I do think there's a good chance they expire worthless, but I do think there's also a good chance that from now, well, actually the option I bought is 2 weeks out, but I do think there's a good chance that from now until the next 2 weeks, the NASDAQ does rip up just by looking at the chart, just by looking again at how fast we rip down. And the easiest way to get a better perspective is really just to invert it, because again, if you were to look at this flying up, you would be concerned. And now, since it's flying down, again, it's emotion, but it's the other way around. Instead of it being concerned about it retracing, you're concerned it's going to fly down forever. So that's why it's like, in my personal opinion, I think the next 2 weeks are going to be relatively bullish. That doesn't mean, I know I'm saying the bottom was in on the title, but that doesn't mean the bottom is in. It means that it's just the market has to retrace when it has these sharp moves. Again, that goes for both ways, right? If it flies up like it did here, right, it retraces. If it flies down like it did here, it retraces. So, just from my opinion, I think it was, or I think it is a good time to hedge against these covered calls that I have. I don't usually love to do this because covered calls, you already have the shares, so you're already so exposed. But like I said, to me, I just feel it. Like, in the end of the day, when you watch the market for years, you have a sixth sense and you can trust it. Now, does that mean I'm going to be right? No. And obviously, there is a world where this option I bought does expire worthless. But that's why I do buy in the money, regardless of the expiration. Because in the end of the day, this only needs to get to 62 for my break even. We're basically already there, right? So at this point, within the next 2 weeks, obviously if the bearishness continues, then I'll probably get smoked, right? But if there is some sort of bullishness, getting to 62 is nothing, right? And that's why, again, I like to stay in the money if I'm buying, right? Very simple, my strategy in terms of buying versus selling is I always sell out of the money and I always buy in the money, right? Because in the end of the day, that's what makes the most sense. That's what's going to lead to you winning regardless of what you choose. Now, do I want to lose 587 if this position doesn't work out, right? Do I want to lose that? No. But at least if this position didn't work out, then that would mean that I printed over 200 or whatever the total amount would be on this, right? It's over 500. So it's a hedge, right? Now, in a perfect world, what happens is this goes up. Ultimately, I roll these calls out. I mean, obviously, again, they are two different dates. So there is the world where, it can expire at 64, let's just say Friday, this is worthless, while this continues to gain value. And then eventually, obviously, regardless, I'm going to have covered calls open. I guess that's what you need to consider, is I have cash secured puts open on TQQ, I have covered calls open on TQQ, and I have calls that I bought open on TQQ. So at this point, I'm in a position where I can make money regardless of what happens. And over the long term, this portfolio is going to do really well. I know it for a fact. Now, in terms of TQQ, I think it's a great wheeling. It's great with options, right? Obviously, it's leveraged. And that's why buying and holding doesn't make sense, because it will decay. But when it comes to wheeling and taking these short-term plays and collecting premium, that's how you can offset the decay. So with all that being said, and I'll show you, I did the same thing with IBIT, right? Here's the call that I bought. So here I have a 43.50. The break even is 47.30, which again, we have 2 weeks to get there, already at 46. IBIT can fly to 50 in 1 day. So, the real premise of why I opened these calls was just because, and again, this is where selling options makes you a better, I guess you can say, quote unquote, trader. It's because, when you have covered calls open, there are moments where you start thinking to yourself, like, these covered calls can easily get smoked, right? And it's the same thing with cash secured puts. I haven't done this yet where I bought puts against the puts I've sold, just because I'm a lot more comfortable being bullish. To me, when you're involved in the right assets, long term, the bulls will always win. So it's easier to be comfortable as a bull, right? Where, as a bear, I like to say the easiest way to explain, the difference between calls and puts, right, is like, there's a reason why when you buy, it's called going long, and when you short, it's called going short. And I think, my thought process is like, well, that means that you should only be shorting in the short term, and you should always be longing in the long term, right? So I think that's where a lot of traders get it wrong, is they try to have these long-term shorts and they try to have these short-term longs. So for me, I'm just not comfortable shorting the market because I've done it so much and it just never worked out, And it's funny because when you actually do zoom out and you look at the NASDAQ chart, it's like, yes, there was opportunities to short, but like, is this really where you want to be devoting your focus? Do you really want to be devoting your focus to shorting a chart that looks like this? To me, I think it's better. You're better off devoting your focus to figuring out ways to protect yourself when the market goes down and then optimize when the market goes back up. So ultimately, do I want to see this TQQ or IBIT call that I purchased expire worthless? Absolutely not. But if it did, I know that I'm covered with the covered call, no pun intended. And if it doesn't, then I'll be happy because then my shares will be up, my call that I purchased will be up. The only thing that'll be down are these covered calls, which I can roll further. So in the perfect world, when you take a position like this, you actually want the covered calls to lose. Now, again, the difference is like, since there's a different expiration date, it could easily work out where they both win. And again, when it comes to rolling, you're able to put yourself in a position where it can all win. So, for me, I have, like I said, a very extensive background in the markets. I do think for a lot of people, though, taking these types of spreads is going to be the safest position. Now, in terms of how you can actually take a spread, so Robinhood does have the builder where, if you don't have the money to do it individually, you can take the positions on the builder, because then, like, let's just say if you take something similar to what I did, here, let's see. What the heck is going on? You could take the position and ultimately, not have to put up a lot of money. But me personally, and if you have a portfolio similar to mine, I'd rather take the positions individually because it just gives me more flexibility. So that's why it's like I sold the covered call and then a day or two later I bought the call against it. Because again, now I have the flexibility to manage each position individually, which is kind of how I would rather do it. That's why I never actually use the term spreads. I never use the term strangles or condor, whatever. Even if my strategy is exactly what that is, for me, I'd rather look at each position individually, right? So I'm looking at this call that I bought or whatever it is, wherever it is, right? It's hard to see which one's which. I'm looking at this call that I bought and this call that I bought as separate from the calls that I sold, because at the end of the day, I'd rather manage it that way. I'd rather, again, see these calls fly up, roll out the calls that I sold, and just take it from there. But again, there is the possibility where the market does continue down. And at that point, of course, these shares that I have will go down as well, which is going to sting. And the call that I have would probably become worthless. But at least the covered call would cover that. And ultimately, the shares will bounce back. So to me, I think this is a smarter way to trade. Ultimately, smarter than just buying naked options, right? Like, if you're going to just buy calls and not have anything, any spreads against it, anything like that, I think this is just a smarter way to go about it. I think this ultimately is something that makes sense for me because, again, for me, when I find myself trading, individually trading without having options that I sold against these positions, it just doesn't work out, right? Where in this case, I'm just detached. It's not like I am going to be sitting here, watching this all day or just obsessed with this $500. For me, I'm just detached. I truly do believe that the next 2 weeks will bring some sort of retracement. And if I'm wrong, I'm wrong. I'm not sitting here calling myself, Nostradamus. I'm just, taking it based on what I see, taking it based on my own observations. And to me, I have enough signs to believe that the market, this downward trend is going to slow down. Do I think we're going to go straight into a bull market? No, not necessarily. But again, when you actually look at the real chart, yes, there's definitely more room to fall, but at the same time, it's just such a straight retracement down in a trend that's clearly up, right? Like, it's not like what we see here where we're making consistent lower highs, lower lows, right? This is just a straight down drop. So even with this straight down drop, does have to come something like this, which is what led me to taking these calls that I decided to purchase. So again, I think it's a smart way if you wanted to take trades, and you can do it on the other way around, right? If you're selling puts, you can buy puts against the puts that you've sold. If you don't have a lot of money, then you can open spreads with the builder on Robinhood, because that'll allow you to do this without, doing it without having, hundreds of shares and all the money, that I have in the account, right? Like you could make the width higher. And like I said, when you do it, you only have to put up the $100 of collateral, which is what makes it awesome. But again, for me, I'd rather do it individually because I just have more flexibility, and ultimately can look at it more. I don't know. I just tend to get confused when I actually use the term spread and I actually use the builder. To me, that makes me more confused, right? For me, I find it easier to just buy a call, manage the call, sell a call, manage the call. And, you can call it whatever you want to call it, right? So, in the end of the day, I think keeping it simple is always going to be what's going to lead to the most success in the markets. And that's what I elected to do. I personally, like I said, what led me to buying these calls was that, I sold them and I'm looking at it like, holy crap, these are easily calls that can go underwater. And that's really what it comes down to in terms of like, how do you know? You have to just be in tune with the market, right? Listen, I'm not going to sit here and say I'm perfectly in tune, right? Because if I was, I would have sold the top and bought the bottom and done everything perfectly. But, just watching the market so long and just always, being involved, always watching, it just, led me to think now is a good time. And ultimately, like I said, the real premise of what led me to buying these calls was the simple fact that when I evaluated the calls I sold, I'm like, I think there's a very high probability that the calls that I sold will go underwater. So I'd rather hedge a little bit more against it. So again, you could do this strategy either way. If you truly believe we're still in a bear market and you're an option seller, then yeah, you can go ahead and buy puts against the puts that you might be selling. But for me, like I said, I think the ultra bearish strategies, I'm just not comfortable because I've been there, I've done that, I've gotten smoked trying to short the NASDAQ. Now, obviously people that have shorted the NASDAQ the last couple of weeks are making a killing. But that's the other thing about the market, right? It's only a matter of time before those people get humbled too. You have to keep in mind, the market does not like to let anyone win easily. So times like right now where the bears are winning, they're winning too easily. And it's only a matter of time before the manipulation, the powers that be, make sure that comes to an end. So with that being said, I'm going to wrap up this video. I do want to say that the premium of my Discord is still available for free. So before anyone tries to say, oh, you're going to charge us for, you're losing trades, blah, blah, blah. It is still 100% free. If you want to join the Discord, you come to announcements, click this link. You'll get free access to everything premium, which comes with my signals, right? I give them right as I take them. Comes with the complete option selling course. So if you've never sold an option before, everything you would need to know to sell your first options included. And a bunch of other cool things. So again, 100% free. I'm going to keep it open still until at least 100 people sign up. I think right now we're at like 50 something, right? Let's see how many people are in the premium. 17 plus 29. So what is that? 46. So yeah, we're still going to keep it free for another 50 spots. So make sure to join before it's closed for good. I hope you enjoyed this video. I hope you feel like you learned a lot. Make sure to comment your thoughts. Make sure to like, make sure to subscribe, and I will see you in the next one.